Hey everybody, what's up? Tuesday, October 16th. Yesterday, Monday, of course, I work on MMT Trader. And I sent that out last night. If you'd like to get a copy of that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. All right, let's go over what is happening. Got a nice rally in gold. By the way, if you look at where gold is right now, it is almost $50 higher than where it was at the time of the last rate hike back on September 26th. So interesting. Maybe for some of you who keep operating under the belief that rate hikes are bearish for gold. That's not the case. And I have mentioned or stated the fact many, many times that we have had 8 rate hikes now, 8 rate hikes since December 2015 when the Fed reversed course on monetary policy and started raising interest rates. We've had 8 rate hikes and gold is up 18%. And that includes the recent very significant correction we had over much of the course of this year so far. Now it's starting to move back up. But we are higher now than we were, almost $50 higher now than where we were at the time of the rate hike just back in September. Same thing with the dollar. By the way, I have people here posting up comments like, Mike, why is the dollar going up when rates are going up? Isn't it supposed to be the other way? Frankly, I don't know what you're looking at. I don't know what you're looking at. The dollar index in 2015, around the time of the Fed rate hikes, was at 98. Today, what? It's at 95. It's below 95. We've had 8 rate hikes. All right? Dollar yen in December 2015 was at 121. Today, it's at 112. The euro was at, I believe, 109. Euro dollar was at 109. Today, it's at almost 116. All right, I mean, you could go on with these levels, and the dollar is not higher. We've had 8 rate hikes, okay? You went from 0% interest rates to 2.25% interest rates. We have 8 rate hikes. The United States is pretty much the only, or the Fed is pretty much the only central bank in the world raising interest rates on a consistent basis, if at all. Everyone says it's supposed to be super dollar bullish. I mean, go over the numbers. Folks, let me explain this to you once again. There's a difference between reality and belief. Now, you could believe whatever you want. You could believe in Bigfoot. You could believe in alien abductions. I don't care. It's a free country. Believe whatever you want. But the reality is the dollar is lower. And by the way, the dollar index right now is within 0.5% to 1% of where it was after these last 2 rate hikes. In other words, the September 26th rate hike and the one we had before that, that was, June 21st or something like that. So it is within 0.5% to 1% of where it was since these last 2 rate hikes, which on top of the rate hikes, you had all this commotion about trade wars and tariffs and how, oh, that's going to be so bullish for the dollar and so bearish for every other currency because the United States is levying tariffs against everybody and everyone's going to flock to the dollar and there's no other alternative. The whole entire narrative has been so dollar bullish, it hasn't moved. It has not moved. 8 rate hikes. 8 rate hikes, it has moved. So the last 2, we are within 0.5% to 1%, the dollar index, if you want to use that as a barometer for the dollar, as a proxy for the dollar. And it's going to go down. It's going to go down. This is a correction. I've said this. However long it takes, 6 months, 7-month period, it is a correction. And it is starting to roll over. So I have said this ad nauseum. We'll, I'm sure, come back to this at some point down the road where I will be correct, and you will see. All right, this is just, I mean, this is science. This is not some sort of mystical prediction. This is not about lines on charts. We've been all over that with the lines when it came to the bond yields. Broke the line. No, everyone, oh, the line, the line, the line. It's not going to break the line. That's the top in the 10-year yield, 3%. So everybody was saying it. Everybody was saying it, including all the big shots on Wall Street and the big banks. 3%, and all you technical people with your candlesticks and all your other stuff, your head and shoulders and your cups and saucers and your teacups and your triangles and your pennants and everything else. The line, I said, was going to break the line. That was an easy call. That was a very easy call. I mean, if there's one market that is easy to forecast, that's the bond market, because it is controlled by a monopolist. I've said this a million times. The central bank, the sovereign, basically the central bank, the government, the issuer of the currency, the sovereign, it sets the rate. That's it. Everybody's like, oh, you know, the bond vigilantes, what's inflation? Nothing to do with that. Nothing to do with inflation, nothing to do with growth, nothing to do with that whatsoever. I don't care if inflation was zero. I don't care if inflation was negative. If we were in deflation. If the Fed wanted the bond yield to be at 10%, it could put it at 10%. And I don't care if inflation was hyperinflation. If it wanted the yield at 0%, it could put it at 0%. That's the power of a monopolist. It sets the price. So for me, the bond market's the easiest market in the world. That's how come everybody who has been following, you know what? I've been getting on a daily basis now, emails from people who are subscribers of mine telling me, Mike, I got huge profits in my short treasury position. Should I take them? I have huge profits in my short treasury. A lot of these people, and they're very happy now, but there was a time, and I had to help them out. I had to say, be patient, hold on, add to your position. There was a time when it looked like, right, that the yield would not go above 3%. It kept coming back, and then you had all these supposed very smart people saying, that's it, that's the top in yields, and the yields were coming down, and people were getting a little bit nervous. And what I said, keep selling the bond. Keep selling the bond. Keep buying those inverse ETFs. Oh, but Mike, they're not doing anything. They're not performing. Keep buying them. Keep buying them. Boom, what happened? Now everyone's emailing. I got these big profits. What should I do? Should I take the profit? I got these big profits. What should I do? Worse things could happen to you, right? Worse things could happen to you. Now, a lot of people quit. A lot of people couldn't handle it. A lot of people wanted the profit like right now. I don't want to wait. When do I get my money? I've been all over that. Impatience. Impatience is the killer of success. Impatience is the killer of success. And what goes hand in hand with that is the idea that you will never have success if you are unwilling to be tested, to be put through a difficult period, a period of discomfort that you have to personally handle. That's life. That's nothing to do with trading. Yes, trading is a microcosm of life, but that is life. If you are unwilling to face discomfort, to be tested, to push against resistance, then you're never going to get anywhere. You're going to stay mediocre at best. Most likely you're going to stay beaten down. You're never going to succeed in anything. You're never going to achieve anything. You're never going to get to where you want to go or to where you think you want to go. A lot of you think you want to go somewhere up here, whatever. Make money, be successful. But in reality, that's not where you want to go. And I see it all the time. I see it all the time with people who sign up and then they become flustered and frustrated. At first, they're like, wow, this is fantastic. This is fantastic. MMT, where were you all my life? I'm making money consistently for the first time. This is incredible. Plus, the education I'm getting, and I understand the markets, and I understand the monetary system, and now I can I can look at policy decisions and really be able to forecast what is going to happen as a consequence of that. Just like you know that if somebody throws a rock in a pond of still calm water, there's going to be ripples flowing out in all directions. You understand that. And then what happens? Then they run into some resistance. They run into some difficulty. They run into some discomfort where it's not going their way just that minute, or just that day, or just that week, or just that month, or just that quarter, and that's it. I'm out of here, man. This sucks. This is terrible. This doesn't work. There's something else out there. So they go back on their quest to find the system fairy. The system fairy, for so many of you, is out there somewhere waiting to pick you up and carry you in a ball of cotton across the finish line and deliver those rewards which you justly deserve, right? The system fairy. It's the lines on the charts. It's the candlesticks. It's the pattern recognition. It's this, it's that. It's the stop losses. The system fairy's going to take you there. And she's out there somewhere. You just got to find her. No discomfort, no difficulty, no resistance. Never having to work through something that is hard, right? A lot of you know that, but you want to avoid it. If you've ever seen the movie Scent of a Woman with Al Pacino, what a great movie. And that great monologue when he goes into the school to defend Charlie Sims, the kid who was taking him around, chaperoning him around for the weekend, who was up on some kind of investigation or charges. And he said, I always knew what the right path was. I always knew what the right thing to do was, but I never did it. You want to know why? Because it was too damn hard. Same thing here. A lot of you, maybe many of you, I don't know. Maybe you know deep down inside what the right thing to do is. To stick it out, to tough it out, to make it work. You can literally make it work. But you don't. You know why? Because it's too damn hard, and you quit and you make excuses. That thing is no good. MMT's no good. Doesn't work. It's a great concept, a great theory. Maybe it's right in its understanding of the monetary system, but as far as it doesn't work. Going back to the lines on the charts. You came here from the lines on the charts because that didn't work. So I don't know how to make it any more clear, how to make it any more simple. That's all it is. That's the beauty of it. It's so simple, but at the same time, it's so difficult because for most of us, it's in our nature to avoid discomfort. We run away from it. We run away from resistance. But like the saying goes, it's the sides of the mountain that hold life, not the summit. Walking up those sides, that's hard. That is hard, but that's where the life is. That's where the growth is. All right? Anyway, everything is working out real good, folks. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader and work on yourself. Work on the mental game. That's the aspect that I bring into the picture that nobody else gives you. There's plenty of technical stuff. There's plenty of system guys out there. There's plenty of chartists. There's plenty of fundamental guys. There's nobody like me. Nobody like me. Have a nice day.